Let's be real. Tax season in Canada can feel like trying to navigate a minefield of dates. Get one wrong, and ouch, it could cost you. But what if you had a simple map? Well, in this explainer, that's exactly what we're doing, cutting through all the confusion to give you the clear, definitive deadlines for personal, business, and trust taxes.
So, here's how we're going to break it all down. We'll kick things off with personal taxes, the deadline most of us are familiar with. Then, we'll dive into the corporate world and a special group called CCPCs. We'll also cover the very specific rules for trusts and estates, and then we'll wrap it all up with the key dates you absolutely can't afford to forget.
So you think the magic date is April 30th, right? I mean, for a lot of people it is, but that is just one single piece of a much bigger puzzle. If you're self-employed, if you run a corporation, or if you manage a trust, well, your calendar looks completely different. Let's get into what you need to know.
All right, first up, let's tackle personal tax deadlines. This is the starting point for most of us.
Okay, so take a look here. For most employees, it's dead simple. File your return and pay what you owe by April 30th. But if you or your spouse are self-employed, you get this nice little grace period to file your return, all the way to June 15th. Now here's the trap that catches so many people. Your money, any money you owe, is still due on April 30th. That filing extension is not a payment extension.
So what's up with this big number? $3,000. This number is the magic threshold that can completely change how you pay your taxes. If your tax bill crosses this line, the CRA says, nope, you can't just pay us in one lump sum at the end. They're going to want you to pay in installments throughout the year.
And here's exactly how that works. It's a two-part test, you see. First, is your tax bill this year over $3,000? And second, was it also over $3,000 in either of the last 2 years? If you answer yes to both of those questions, then congrats, you're on the hook for quarterly installment payments.
Okay, let's switch gears and talk about corporate taxes. If your business is incorporated, you're playing by a whole different set of rules. For corporations, you actually get a pretty generous 6 months after your fiscal year end to file your return. But just like we saw with the self-employed folks, the payment deadline is way tighter. You only have 2 months after your year end to pay up. Managing that gap is absolutely critical if you want to avoid some pretty painful interest charges.
Now, within this whole world of corporations, there's a special little category known as a CCPC. That stands for a Canadian-controlled private corporation. And yeah, it comes with its own unique set of rules.
So what exactly is a CCPC? Well, the easiest way to think about it is as a truly Canadian small business. It's got to be private, it's got to be Canadian, and this is the most important part, it can't be controlled by non-residents or massive public companies. So if you run a local, privately owned business here in Canada, there's a really good chance you're a CCPC.
And the whole reason this even matters is that some CCPCs actually get a break on their payment deadline. So the big question you should be asking is, does your business qualify for this little extension? Okay, you can snag an extra month to pay, but, and it's a big but, you have to check 3 very specific boxes. 1, you have to be small enough to claim the small business deduction. 2, your income last year couldn't have gone over your business limit. And 3, your taxable capital in Canada has to be under $10 million. If you meet all 3, your payment deadline gets pushed from 2 months to 3.
All right, let's quickly cover 2 other really specific situations, the rules for trusts and for the estates of individuals who have passed away.
You know, after all those split deadlines, the rule for trusts is actually pretty refreshing. It's simple. Both your Ch03 trust return filing deadline and your balance due date are exactly 90 days after the trust's year end. No split dates to worry about. Everything is due all at once.
Now, when it comes to filing a final return for someone who has passed away, the rules are designed to provide some much-needed flexibility. The deadline is whichever date comes later, either the person's normal filing deadline or 6 months after the date they passed. This really gives the executor time to sort everything out without that extra pressure.
Okay, phew, that was a lot of information, a lot of dates and rules. So let's just lock in the most important ones with a quick recap.
So let's just lay it all out on one timeline. You see the pattern here, right? For individuals and for corporations, the government gives you extra time to file the paperwork, but they want their payment much sooner. For trusts, things are simpler with just that one 90-day deadline. Honestly, knowing which timeline you're on is half the battle.
And one last, absolutely vital little detail. Hitting submit in your tax software, that's not the final step.
Your return is only officially considered filed when the Canada Revenue Agency actually sends back an acknowledgement that they've received it. So always look for that confirmation number.
So there you have it, a roadmap for navigating Canada's tax deadlines. You know the dates that matter for you. The only question left is your paperwork ready? Thanks for joining us for this explainer.